Wednesday, March 26th, market analysis. Stan Ehrlich, good morning. It's going to be short and sweet today. We are breaking down. Remember, I always analyze the stock market indexes first, then futures, and I got a couple of stocks, Apple being one of them, at the end. We're breaking pretty good. Just exactly what I thought would happen. We're up in resistance. We didn't get overbought. We didn't necessarily need that, but it would have been nice. And I do expect it to come down and close the gap, not necessarily today, but it could happen today at 57.23 and a half. The gap between Friday of last week's high and Monday of this week's low is on almost every index chart, except for the Russell. So this is the reason I expected this break to happen. Look at the, look at the 1 minute chart. Coming down pretty darn good and consistently stair-stepping its way down. And the spider, same big gap to fill, has just barely started to do it. It's bigger, and it's starting to close the gap. Pretty much low and last at the moment. And here we are, almost low and last. Now, the gap is still a little bit lower on the QQQs, but it's heading toward it, getting pretty close already. And we are low and last almost at the exact moment. So the gap is partially closed on the QQQ already. It needs to come down to the bottom of this rectangle that I drew in. And that would be 481.60-ish. And here we go, trying to close the gap on the NASDAQ NQ. Not quite into the gap yet, and heading there. What happens after the gap is closed on these indexes? Well, that's a good one. I think this could be a small bounce. I don't expect a new high higher than Monday and Tuesday of this week and today, because today we actually have an outside down day, bearish engulfing. As you can see, the high is just a little bit higher than yesterday's high on the NQ, and we're way below yesterday's low. The only reason I'm not getting a red bearish engulfing sell signal, like for example, this one on top on July 11th, the 24, is because we weren't overbought. You have to be overbought with the bearish engulfing in order to get my system to kick in a signal and trades. Next chart, low and last, coming down pretty good. Next chart is the YM. There's no gap to close here. It's not, whoops, I'm sorry, wrong perspective. There is a gap, that's what I thought, to close here, but it's not acting quite as weak, quite as quickly. And it's not overbought, so we're about to have a bearish engulfing, not quite yet. It looks like we're about to have it. And we just got to get below 42,764. And that'll be below yesterday's low. And here we are pretty close. Okay. Now, Russell, no gap to close. We're getting stuck between the resistance area, the red, and the yellow area down here at 2,000 and a little under 2,019.56 or so. So I'm looking for a dip down to test these lows, maybe in the support and the next week or something, several days. Okay. Certainly the 1 minute on the Russell. New lows, but still got a ways to go. Never got above yesterday's high, so no bearish engulfing. Just simply breaking down. Bonds. I wish this thing would start to go up. We are now down to and right around yesterday's low. It's getting to be a little extra more time than I expected. The price level's still not terrible. Idealistically, it would have been around 115.11, but we're not there yet, and we're taking a little longer than I would have expected by about a week now, maybe a week and a half. So I still have to think about the head and shoulder being potentially good, just a little late on the shoulder. But that's it. If we take too long and we start going below 115.5, nope, that'll kill the whole thing. Next. 10-year notes, not quite to yesterday's low. Same story here. Next, except the prices are different, of course. Timing about the same, formation about the same. And by the way, the bonds could be forming a year and a half double bottom, and the notes the same thing. Especially the notes look good. But I've talked about that for weeks now for everybody. Crude oil. A little more strength, coming up steadily, off of oversold conditions and testing support. I think it can come up to this old trend line. I'm not sure it has a lot of relevance anymore, but we've already reached the first resistance area I talked about, which is around 70 because of these few highs and a bunch of lows there. And also a lot of activity, little tops in that general ballpark area of 70, not particularly exactly. So we might be getting close to, and yep, we're almost overbought. So we should be getting close to a minor rally high. Otherwise, longer term, not quite sure. Next, we're looking at pretty much the same story on the heating oil. Close to overbought, not quite, and stair-stepping its way up pretty nicely, but just reached my first little shelf of resistance today. So we might be pretty close to a little bit of a turn down. Natural gas. The head and shoulder top in natural gas is working just fine. It's just working very slowly. Usually the downside breakout is a big down day with heavy volume and maybe 2 or 3 of those in a row. Then there's typically a bounce back up to the neckline or halfway back up to the neckline, and that may be a few days to a week after the initial breakout. And then it keeps on going down with a zigzag to the minimum downside objective of a little bit below 3 on the natural gas. And that is my objective. So this pattern seems to be doing great, except it's going slowly, which is not particularly typical. Next, gold, overbought. Can't decide for the last couple of days. Couple of dojis here, just going a little bit sideways. I do expect to dip down to at least, 29.70 and maybe down to bigger support at 28.50-ish. Next, silver. Is it forming the last shoulder on a large head and shoulder top, which is almost a year, about 10 months in size. The neckline's fine, upper slanted slightly across the bottom with a bullish ER buy signal on August 8th of 24. That's the first low. Then you made your higher high. At the time, you don't know what's ahead. Come down, but you don't make a lower low. And even if you did, it wouldn't be terrible if it turned around and started to rally back to approximately the same price levels as it topped out before on the first shoulder, and about the same amount of time from the first shoulder to the head should be the same amount of time from the head of the formation to the last shoulder high, which we have coming up now. And the price is right already. So all we have to do is start to head south. And then I'm going to start screaming there's a much better chance of a very large top formation. Next, platinum. Not the same formation at all, just hit resistance, overbought, turned down. I'm looking for a little bit lower test of support below the market where it's been just a month or so ago. Copper did, in fact, snap up really sharply and quickly earlier today and did get to the previous high that we had quite a while back on 520 of 24 and has stopped. This is the potential of a broad double top from May to March. If we close below yesterday's close, which is on the high of the day, I would say this would look like a bull trap, overbought conditions, testing historical resistance, potential big bearish pattern. I like what I see. This could be the beginning of something pretty bearish. I would expect at least, if I'm right, move down to 4.89, let's call it 4.9, and maybe even lower. Next, beans, oil, meal, corn, wheat, cattle, hogs, and a couple stocks. Beans are not doing the best job in the world of holding. The last several days, we've been chewing away at slight new lows. Now we're on the edge of ruining my story long-term, potentially. I still like what I see long-term. I mean, it hasn't destroyed the pattern. And there might even be something bigger and better here if I do start to see a low in the ballpark of, 990, 980, 989, right at 990, give or take $1, or a little higher soon and start to head north. Ain't doing it yet. I'm worried. Might have to turn bearish. Not yet, though. Oil, bean oil. Nice rally. Did make a new high for a couple of weeks. That's getting something started. That's what I like. The resistance stopped the rally this morning but I think it's going to be overcome. We're going to get higher in today's high and in this resistance area fairly quickly and fairly easily this week. Today's Wednesday. Okay, next we've got meal, minor new low, a series of major bottoms over a very long period of time still lead me to believe there's a chance this could bottom out like the other grains. But hey, we're so close to another new low, and this trend is down long term. Lately, we've seen rallies that couldn't make higher highs. It looks pretty sick. So we got to have a really good move up in order to break that pattern. So I'm sorry, meal's looking the worst of all of them. Corn, minor new low today, still could be forming a bottom formation. I just have to see it turn up. Otherwise, I'm off kilter and should be bearish, but I just can't make myself do that quite yet. And wheat, same story here like corn, but closer to doing some damage to a longer term bearish situation, bullish situation. So cattle, we got a sell signal on Friday. It came down a little bit on Monday. It was relatively stable, although new lows on the close yesterday. And today we're seeing it bounce slightly. Well, I can't say the signal did not work because we do see lows yesterday a lot lower than the low of the signal day, giving it plenty of elbow room to lock in a profit. Not much, but something. And today it came back up. So I'm still bearish, but I wish this would start closing below yesterday's low. Then I'd feel a lot better. And hogs, bullish engulfing today at the moment. Outside up day, not oversold, so no signal, but even by themselves, outside up days or bullish engulfings tend to push the market higher for a little bit. It's hard to tell how much and for how long, but a little friendly because of the way it's acting so far today. And definitely part of my signals if you also had oversold conditions, but we don't. Next is that Shell stock. Another new high today, still overbought and substantially so. And now the possibility of a divergence, meaning new high in price for a day or two and not in the indicator. So we'll see if that pans out. We did gap up yesterday, so there's another gap to close. The one I'd called an exhaustion gap last week did get closed, but it turned right around and shot straight through the roof. So I'm actually looking for some big downturn here real soon, but I don't jump the gun. I wait until I see something start that I recognize and can handle. And lastly, we got Apple. And Apple had a bullish engulfing ER buy signal on Friday the 21st, up Monday, up Tuesday, and so far today, we're a little bit lower. I like what I see. The signal past tense has been good. ER1 overnight, no problem. I think the ER1 scalp also made a little profit, not much. So I'm still looking for higher levels. 229.70-ish looks interesting for a stalling point. I don't think we're going to be overbought at the time, but more likely than not, something between 240 and 250, especially if we're significantly overbought and get there relatively quickly, say a week. If that's true, then I would be very likely to be expecting a bearish turn. Next, we've got back to the E-mini, almost low and last, down 6 points now. Earlier comments stand. We've made a new low while I've been talking. You guys have a great day and profitable trading to you.